Should we buy or sell the TLT? First off, read this disclaimer carefully. And do your good deed of the day by liking and subscribing. So we have seen a major crash now in the bond markets. The 20-year Treasury bonds have been eviscerated. We are at the 52-week lows, minus 17% away from the 52-week highs, which is a huge move in the bond market. Very small percentage moves here are actually a very, 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 very big deal, and much bigger of a deal than a huge move in the stock market. So in this case, we do see, looking big picture, weekly data points all the way back here to 2010. This ETF is a pretty big fan of time cycles. They have differed, however. There's a tendency here in the cycles for there to be, let me draw it in, these head and shoulders patterns. So you have a left shoulder, a head, and a right shoulder. A major left, major head, and the right shoulder, left shoulder, a head, and a right shoulder. So head and shoulders patterns have been all over the place with this ETF. Looking back here, you did see that measured move play itself out, but during this one, we didn't really see that. Obviously, this one is to be determined. You could make a bit of a contrarian case now that we do have something that looks a lot like horizontal support. So let me draw it in. So we have horizontal support back here, here, very clean, here, and also 1, 2, 3 here as well. So that is something that technically could help out the bulls. Looking here at the daily data points, yeah, we are below literally every single moving average. When we look at these other indicators, starting here with the weekly data points. So in terms of the RSI level, during this sell-off here, we did actually go lower on the RSI before we got a rally. But if you look back here, buying this RSI level was a very, very, very good time to turn bullish on the TLT. Worked out marvelously. Back here as well, a good time to buy. Obviously with some stop level as well, but it was a good time better time to turn bullish than bearish. And back here as well, we had a very similar RSI level. This was a bit more noisy, but it did eventually work out pretty well. And here, if you bought, this low RSI level, you would basically nail the low. The distance from the purple 20-week, green 50-week, blue 100-week, and the red 200-week moving average, it is currently at levels that have been very good times to buy the TLT in the past. When we jump into the daily data points, we do get a very similar message. There have been times where we have been lower on the RSI and the PPOs, but more often than not, the current readings have been more beneficial to the bulls. So when we go here to the laboratory, so oversold, RSI, and PPO, the vast majority of times where we had these readings, it was actually pretty darn beneficial to the bulls. It was actually dangerous to turn bearish. So I will give this one strongly to the bulls with a 7. Boom. But that is purely technicals. Now let's look at seasonality. So, looking here to the right for the TLT, in green over the last 5 years, seasonality gets stronger here towards late June. In blue, over the last 7 years, stronger towards July. In red, over the last 10 years. This is a good time to turn bullish. It becomes very strong towards July. To the left, over the last 5 years, from April to June, very, very good seasonality. Also actually July. Over the last 10 years, April, May, June, July are some of the strongest, most bullish months for the TLT. Then we go big picture. over the last 20 years, seasonality is very good. From April to August, it's very nice to be bullish on the TLT. So, the seasonality certainly corroborates the bullish thesis. I think I will give this one a 6. This is very good seasonality. In terms of the fundamentals, that is where it gets a bit more complicated, okay? Because obviously, the treasury bonds are going to be very much affected by interest rates. The central bankers are not exactly very clear, about, their plans, longer term for interest rates and, other types of policies that, are relevant for bonds. So this is very complicated. We obviously cannot do anything with information that we do not know. And unfortunately, I do not have any special intel, that Powell has told me or anything like that. When we compare the BNDX, which is the total international bond ETF, with the TLT, and we go here to performance, we see that year to date, the TLT has lost substantially more. Looking here at the beta, you do see that there's a higher beta here for the BNDX. In terms of the yield is pretty similar, 1.60 here for the TLT, so none of these have really good yield. Anyway, given the violent reaction we have seen in the bond market now, I would be very surprised if we get any more breaking news now. I think that, the powers that be want to just wait a bit now until they say anything more to let the market sort of digest the information, because the move is very big. There's all these people who are like, this crash in bonds is very good because it means that, money will go other places and blah, blah, blah. That sounds very simple. And also it's just very naive, because all the financial markets are interrelated. And the bond market, the debt market, is very important in a debt-fueled economy. So, yeah. I do think that the moves have been so big that I would be surprised if we see any more major news. So I would give the fundamentals here let me give it a 1. Here are the correlations between TLT and the S&P 500, minus 11%. Then we have plus 61% with gold. Then we have 39% with the BNDX, the total bond market ETF. And then we have minus 6 with the dollar index. Daily data points. Then we do have 44% with SPY, minus 71% with gold, and 91% here with BNDX, and 63% negative with the dollar index. So looking short term and long term. It certainly seems like what happens with the BNDX, here at positive 91% on the daily data points, it's going to have, a substantial effect on the TLT. So let's look here at BNDX. So here we have weekly data points, and we have seen an absolutely humongous move. You could make a case that we have something that, technically speaking, could become a double bottom, like here, potentially. Looking at RSI and PPOs, we are very, very oversold, and also the MACD has just been eviscerated. Accumulation distribution is actually holding up very interestingly. So there definitely are buyers. Anyway, this move has been very, very violent, just absolutely extreme. So I do think that the powers that be they are going to be a bit silent and wait until the market fully digests this. If anything, I would expect, some of them to come out of the woodworks and say something to sort of balance the market a bit here. So here we have the relationship between the TLT and the BNDX. So as an example here, between 2018 and 2020, we did see that the TLT outperformed the BNDX. But then we did see that we got a period where the TLT underperformed the BNDX here quite significantly. Let's look a bit here at the daily data points to get some gauge on the seasonality. So in green over the last 5 years, the TLT usually outperforms the BNDX towards late June. In blue over the last 7 years, usually outperforms here towards July. So that's more supportive of a bullish take. When we look here at the relationship between the BNDX and the S&P 500, yeah, we see that BNDX has massively underperformed the S&P. When we go here to the daily data points, looking at seasonality, yeah, the seasonality is not favorable to the BNDX. I do find it especially interesting that the TLT has a tendency to outperform the BNDX here from a seasonality perspective. So I do think I will also give this one a bit here to the bulls. Yeah, I think I will give the bulls here, yeah, give them a 4. So we do end up with a 4.5, so the data is quite strongly in favor of more bullish theses on the TLT than bearish. The caveat here, of course, is that while we have seen deeply oversold technicals, seasonality is very good. From a fundamental perspective, I would be surprised, given the ferocity of the move, that a key assumption for this bullish thesis would certainly be that there's going to be some silence now, such that the market can really digest the new information, because the move has been very dramatic. So here you can see one of the explanations from the street, about why we have seen the big move. Yeah, so yeah, basically the move is because of raging inflation and the beginning of the Federal Reserve's interest rate increases. Here is another, a take from Bloomberg: stocks defying bond market danger put Wall Street on notice. A key thing discussed here, is that balance between money flowing between bonds and stocks. Whenever you read those kinds of articles, it's very important to just remind yourself that the bond market is here to serve a very important purpose, okay? So when we do see a major dislocation, a major move in such an important market, then it is extremely naive to just think that everything will just be no problem for the stock market. Because guess what? The stock market is also very much dependent on what happens with the debt market. In the same way that the stock market is very dependent on what happens with the forex market. So if we do get a big move in forex, then that will obviously have a certain effect on stocks. Like if you saw this video I made here, looking at US dollar and Taiwan dollar, then you saw that there was a very strong correlation between that currency pair, and this is a currency pair, and the Taiwanese stock market ETF. So that's my point here. The financial markets are very interrelated. And let's say that we do not get a bounce here in the TLT and, it just keeps going down, down, down. That will be dramatic, okay? So that will be really a big deal. So yeah, whatever the case is, interesting stuff here for the TLT. Data certainly suggest a more bullish thesis, but as always, it's very important to use stops, because as we have certainly learned over the years, very unexpected things can happen.